Hey there, traders, and welcome back for episode number 63 from the StockBandit.tv. I sure hope that your brand new week of trading is off to a great start. You're able to make a little jingle out there. Didn't see a whole lot of movement, but there were certainly some opportunities. So in this episode, what I want to do is talk about something that's very important. And the topic here is why you wait. That's the thing. When you find a setup that's worth trading, oftentimes, based on the pattern, you're going to have to wait until that pattern is confirmed. And by doing that, you're probably going to get a slightly worse exit than if you were to anticipate that move. But at the same time, you're going to eliminate risk that comes along with a stock that never does confirm that pattern. And so what I want to do is take you through an example here of a setup that was looking pretty good and actually failed today and never offered an entry. If you were someone like me who chooses to wait until a pattern is truly confirmed, then you never took an entry on this play and therefore never cost you money. And so if you're an anticipatory trader, sometimes you've got to start very small and jump into a trade that you really like and then add to it once it's confirmed. My personal style, and I'm certainly not saying that if that's your style, it's wrong. It's simply different than what I prefer. Me personally, I like to wait for a pattern to show me that the stock is now moving in the direction that I expected it to go. So as we look at this example, this is OSG. This is a shipping company. I don't really know what they ship. I don't really care. What I look at is patterns. And for this stock, it had trended lower, and then it really stabilized here for a couple of months after bottoming out right there in March. So this stabilization here paved the way for a directional change. The trend was down right there, then it starts moving sideways, and then the trend turns up here a couple of weeks ago, and we see the stock really catch a nice bid and start to make some very meaningful upside progress. A great run higher is what this stock started to show. Now, if I zoom in a little bit more here on the chart, what we got in recent days is obviously the high is right up here, and then we saw some higher lows that were being formed here on this daily chart. So what that shows me, number one, this is an ascending triangle pattern right here, where you've got the ascending trend line right here, and then you've got horizontal resistance up here. And generally, this pattern, once you've got this look right here, these patterns just continue to draw closer and closer to one another until at some point price either is resolved to the upside or to the downside. And as these two converging trend lines get very close, you get a push one way or the other. What I personally prefer to do is wait for that breakout to the upside, because I view this as a continuation pattern on the upside, especially given that the trend ahead of it was up. You could also make a case for a bull pennant pattern here, with this being the flagpole and then this pennant area right here with these two converging trend lines. But nonetheless, the implication is the same. A breakout had to occur before this stock is on the move. And of course, it looked like it was getting near a breakout. However, today the stock actually crumbled, turned lower, and broke down right here with this break right here, this lower rising trend line. And what you get here is a failed pattern. And so that means it's grounds for dismissal from the watch list. The failure to break out here at this 38.75 area is now no good. So what I do is I go in and I delete these trend lines and just pull them there off the list. And what you get with a little bit cleaner look at the chart is kind of this run up and then kind of a stalled out look and a rolling over type of move. That's certainly not the kind of pattern that I want to be buying. Now, whenever you do see a failed pattern that you've been stalking, number one, congratulate yourself for not jumping into that trade prematurely. When you do that and then it fails, you feel like a real monkey. However, the other thing to do is wait for a new pattern to emerge. Remove those trend lines that you had drawn on the chart like I just did. Get rid of that so that your vision is no longer cluttered. You're not being influenced by that former opinion that this stock with this type of a setup right here is going to shoot higher once again and regain some of this momentum. Instead, it's now time to go back to the drawing board, wait for a brand new pattern to emerge. So don't get ahead of yourself out there. When you find a good setup, great. Draw your lines in the sand, but once that pattern has officially failed, step aside from it, walk away, find a new trade. There's always going to be another one out there. All right? Thanks again for joining me for another episode. I will be back soon with more videos, but in the meantime, trade like a bandit.